Hey everybody, it's Jonathan Rose, founder of Masters in Trading, and welcome to another week of Masters in Trading Live. We get on here every single day, 11 o'clock Eastern Time, share a little bit about the market, and every single day we're going to share our one best trade. Oh, I realized that I did not change. I'm using this from Friday, but that's okay because today we have something totally different. Today, we're going to be talking about a divergence trade. A divergence trade is just a pair trade. Two correlated assets break apart. That's a divergence. We want to play for them coming back together. The next topic is, why did this divergence happen? The third, I say this often, and for those of you who've been watching, this is something you've heard me say again. The third one, we're going to build our memory bank. We want to see experiences. When you see those experiences in the market, they're going to happen again, and that's when we can capitalize. The fourth is the trade of the day, not an election, but in a cruise liner. I'm very excited about this trade. So let's go over to the charts. Check it out. Okay, again, divergence trader. Divergence trader is when things that are correlated just start moving apart. And check this one out, guys. This is awesome. RCL, cruise line, Northwest, whatever, cruise line, NCLH, Norwegian cruise line, RCL, CCL, Carnival, cruise lines. Why do we trade divergences? It's the industry. Going back to 2015, don't look at these as different companies. Look at these as one industry. There's two here, guys, because these are both Carnival Cruise Lines. This is Carnival Cruise Line in the US and then Carnival Cruise Line in Europe. That's why they're all together, but just look at them as CCL. It's an industry, okay? Norwegian, nice and strong. RCL weak. Notice how they come back together. Notice how they come back together. Now, RCL has been historically way stronger. It's actually, too, if you notice, it's a little bit more volatile than the others as well. They all get crunched together. COVID, RCL, first one to recover. CCL, NCLH take a little bit of time to recover. But RCL, right now, this is the biggest divergence that we've seen in the cruise industry. But what did RCL do, guys? What is so different that RCL did that the others weren't able to do? Did a little research. RCL, aggressive debt reduction and refinancing. This has always been the issues with the cruise lines. RCL was the most aggressive in reducing their debt. Competitors didn't do that as much. Royal Caribbean, while they were decreasing their debt, they were also expanding their fleet. The others weren't able to expand their fleet quite as quickly. And then finally, RCL, really strong partnerships, improved operational efficiency. So that's why RCL was able to outperform the other two. Now, we call this building your memory bank because this is a trade that we've done so many times in the past. Take a look at this call I made on Carnival Cruise Lines back in May 2023. At the time, Carnival Cruise Lines had been trading sideways after a really steep decline. Not many people had this stock on the radar, and the analysts, they were staying far away because Carnival had been issuing a lot of new shares. That's why it was trading lower, which was diluting the price. But on May 1st, I noticed a huge spike in volume of the call option on the stock. And that's when I told my readers, hey guys, we want to buy the July 10 calls. And we want to do that for 65 cents. Now, the cool thing about doing that, it's $65 per contract. You can never lose more. The very next day, the CEO spoke live at the Milken Institute conference, telling the entire industry that the company had a record-breaking booking and he had no plans to issue any more stock. What happens next? This stock went on an absolute tear, rising over 30% in the next 2 months. And the options that I recommended, those suckers shot up almost to 18.15. 626, right about here, we're talking about it trading 650. That's $65 a risk to make 650, 10 times. But the options traded all the way up to 1815. So this is building your memory bank. We've seen this trade before. How can we take advantage of it again? Here's the trade, buy 10 calls, sell 10 calls. Great trade. Let's hit it again. CCL right now. This is what we call our high value target tool. These are just 3 and 4 standard deviations on a 21 day moving average for implied volatility. When CCL trades outside of the bands and gets back inside, you'll get a sell signal. If we trade outside and come back inside, we'll get a buy signal. We didn't get a buy signal here, but we are getting a buy signal right now. So we're getting a buy signal in CCL, but we know CCL is inexpensive relative to its competitors. So let's look at the options. CCL today. What trade? What's the trade? Well, the trade that I like, first of all, that's unusual option activity. That's not today, that's in the open interest. The trade that I like is, oh my God, Jonathan, what are we doing here? Sorry, guys. Buy 17. Buy CCL. Oh, July 24. It's here. July 24, 102 days. Let's buy the 17 strike. I want to make sure I get that down for everybody so you can see it. Okay, so we're going to do the 17 strike. We want to buy these. Now, the risk is just 97 cents or $97 per contract. If you want to do 10 of them, hey, that's $970 per contract. This trade, we're going to be in it for 102 days or until we could take off a big fat profit. Now, I spent time over the weekend going over all the trades that we've been sharing. I've been trading trades. I've been sharing trades. I got it. Eclipse is coming. That's probably why I'm having trouble speaking. I've been sharing trades since February 28th. So far, not including CCL, we've shared 21 trades. We've closed 7 of those trades already for an average return of about 99%. We still have 14 open trades. We're on here live every single day, 11 o'clock Eastern. Don't miss the next trade. We like to say the creative trader wins. Trade smart. My name is Jonathan Rose, founder, Masters in Trading.